the Indian market's taking a bit of a pause, and it sort of needs a new catalyst, in my view.
The man who coined the term BRICS, former Goldman Sachs chairman Jim O'Neill, says Indian markets running out of steam. This after bears landed a late blow on Dalal Street. The Sensex down below 29,000. The Nifty loses almost 100 points.
Wholesale price inflation contracts for the 5th straight month. The WPI in March stands at -2.33%, the lowest in 68 months. Food prices remain benign. Manufactured products fall in the negative zone for the first time.
Emerging markets in for a rough ride, says the IMF's financial stability report. Also warns that risks to global growth have risen.
Absolute net neutrality is a utopian idea. The government favors non-discriminatory content neutrality, says the telecom department sources, as India cannot blindly ape the US.
India signs a $350 million deal with Canada's largest uranium supplier for 5 years. In Ottawa, Prime Minister Modi says both nations will sign a bilateral investment protection treaty soon. This is the first bilateral visit by an Indian Prime Minister to Canada in 42 years.
And for the first time, TCS will kick off the IT earnings season tomorrow. The street does not expect fireworks. A CNBC TV 18 poll expects muted revenue growth.
On the hour, 80 years after it came into being, the Reserve Bank of India is getting tech-savvy. The central bank has now logged on to Twitter and YouTube.
And Modi government's smart city push has many global companies excited. We speak to global IT major Avaya, which has big plans for India.
And from smartphones to smartwatches to smart ATMs, a special report on NCR India's Kalpana, an ATM that promises to be faster and smarter on Up South.
And will underpin the firm.
Well, the picture said all. The European Central Bank Chief Mario Draghi got the shock of his life earlier this evening when he sat down for a press conference. Draghi was dramatically cut off by a protester shouting, "Stop ECB dictatorship." Good evening. On a dramatic note, welcome to India Business Hour. Nantara, Draghi unruffled post that.
Full marks to him. He remained calm, came back after the disruption, started the speech again, and then said, you know what, I'm going to begin on a positive note. And we still don't know the nationality of the protester.
It's definitely one press conference no one is going to forget in a hurry, but we've got a lot more that's coming up for you on the show tonight. Let's kick things off with the day's trading action. The bears staging a dramatic late assault on Dalal Street today as the markets nosedived in the last hour. The Sensex was sitting comfortably above the 29,000 mark with just 60 minutes left for the trading day to end, and then came a dramatic fall with the index losing over 240 points. That graph tells you the story, that sharp decline in the last hour or so. Ditto for the Nifty, which lost about 1% to break below the 8,800 level. Mid-caps also felt the brunt with the index losing nearly 100 points. Anuj joins us now to wrap up the day's market action. Anuj, what triggered this late collapse?
Well, no one has the answers about what led to this late collapse, but what a lot of people were saying was that there could be a bit of basket selling that could have taken place somewhere around 3 p.m. But the market did fall quite a bit in late trade, and it was secular in nature, so there is a bit of credence to that theory. Now, what was interesting was that the Nifty fell about 100 points and the Bank Nifty about 400 points in the last 30-35 minutes of trade. That was telling you the ferocity of the fall really was quite big. Let's talk about the stocks. And there were a lot of stocks which were losing ground. The sector which was weak through the day today was pharma. Stocks like Sun Pharma, Cipla, Lupin, they were all lower, and that leads to the question whether the top has been made in some of these pharma stocks, at least for the near term. Apart from that, IT stocks also ahead of TCS's numbers were weak. So HCL Tech, Wipro, Infosys, TCS itself, they were all lower in trade. Some other prominent Nifty losers included Bharti, that was down about 2.5%. Financials led the late decline, so HDFC was down about 1% and Tata Motors was down about close to 3%. There were some gainers as well in today's trade though. Sesa Sterlite was up about 2.5%, ONGC was up 2%, State Bank was up 1.5%. Then in the mid-caps, big decline in some of the F&O names. Stocks like Wockhardt, which is in ban actually, was down 7%. Just Dalal was down 4%, Century Textiles was down close to 5%, but there were some big winners as well in trade today. Tata Communications, that was up about close to 5%. TV18 Broadcast, that was up 9% after numbers. Of course, that's the company that owns the channel. And DCB Bank was up about 4%. So as of now, it's only a one-day reversal that traders are talking about and dealers are talking about. Will be interesting to see if we have a follow-up tomorrow, because that could change things again in the near term.
Thanks a lot, Anush, for joining us with all of that. So last 60 minutes, everything changed. Let's get you an expert view now. Indian markets running out of steam. That's the word coming in from Jim O'Neill, the former chief of Goldman Sachs Asset Management Unit. In an exclusive conversation, Jim O'Neill said India will take a back seat when compared to global markets in the near term. Listen in.
India, I think it's run out of a bit of momentum, to be honest. I think the budget that we discussed at the time, it didn't really have a big wow factor. There's nothing wrong with the budget. There was a lot of things that can turn out to be very positive. But you know, India's had this huge rally for the past 18 months. I think the Indian market's taking a bit of a pause, and it sort of needs a new catalyst, in my view. I think for now, India probably take a little of a backseat to some of the other big so-called emerging markets like China.
Well, that's Jim O'Neill. Post-budget, he said that the budget lacked a wow factor. Now he believes that the Indian market has run out of steam and that China will be an outperformer. Inflation is well and truly on the decline. Here's more proof. Wholesale price inflation has declined for the 5th straight month to its lowest level in over 5 years. For the month of March, the wholesale price index is at minus 2.33%. This comes after the minus 2.06% clocked in February. Food prices remain benign. In fact, they've slowed down in March to come in below the 7% level seen in February. What's more, the prices of manufactured products fell into the negative zone for the first time ever. Lata joins us now to tell us what these numbers mean. Lata, is this a case now for advancing the rate cut? Are we going to see perhaps even an out-of-policy rate cut from Governor Rajan on the back of this data?
Well, before that, a few positive internals on the WPI itself. The fact that food inflation has softened is very important. Actually, if you looked at the internals and looked at each entry like rice, wheat, cereals, vegetables, they have fallen month on month. I mean, March prices are lower than February prices, and that indicates that the unseasonal rains have not at all had any impact on the actual food prices nor on consumer psyche, which is a major achievement. Either food supplies have been well managed or aggregate demand has fallen adequately. It's in the manufactured prices where there is a bit of a worry. As was pointed out, it's come in negative, 0.33 negative year on year for the first time. If producers are getting lower prices than when they started production, then it would be a little worrisome. This is largely because this wholesale price index largely depends on the landed price of goods, and global commodity prices have been falling. So that's hurting a lot. This could be a case for the Reserve Bank to advance the rate cut, but the Reserve Bank looks at the CPI and not the WPI for an indication. So we cannot give this as the reason for more rate cuts or earlier rate cuts, but clearly both the CPI and the WPI are opening space for easing on rates.
So all eyes now on Governor Raghuram Rajan. When is the next interest rate cut going to come? Good WPI number being followed up by a good CPI number of 5.17%. Thanks a lot, Lata. The emerging markets may be in for some tough times over the coming months. That's the word coming in from IMF's Global Financial Stability Report, reiterating what IMF Chief Christine Lagarde has been saying for a while now. This report says the financial stability risks are shifting from advanced economies to emerging economies. CNBC TV 18's Jitsu Singh has the highlights of that report.
The next 12 months are definitely getting harder. According to the IMF report, the risks to global financial stability are on the rise. In fact, thanks to the global macroeconomic shocks, they may be higher than last year. Some of the key risks it points out in its report is increasing volatility, especially in the currency markets, where it points out that emerging economies will be hard hit due to the strengthening dollar. It expects corporates as well as governments that have borrowed heavily in foreign currencies, especially the US dollar, to be hit by the burden of debt to be repaid. In fact, some of the emerging economies have already started seeing significant outflows of capital. The most important risk it points out is the Fed's imminent rate hike, where it says there is a need for continuous and clear direction as far as Fed's and communication as far as Fed's U.S. monetary policy is concerned. It says that if investors or markets are surprised by the quantum of the rate hike or the timing of it, we could see increased and heightened volatility, more pronounced and more common than before. Oil and commodity prices, the report report points out, may have helped the global economic growth, but the countries that are exporting these commodities may be hard hit because of these falling prices. In fact, the debt repayment strain is already starting to show in some of the emerging markets like Argentina, Brazil and South Africa. But other than that, there are some positives as well. As Christine Lagarde, of course, reiterated, this report also mentions that the coming year, which is 2015, will see a better growth rate than the last year, helped of course by the softening commodity and oil prices, as also the easing inflation the world over, which will aid economic recovery.
Now, the telecom regulator has been bombarded with emails to save the internet from being manipulated for commercial gains. The government has set up a committee to examine the issue, but sources say the Department of Telecom is in favor of content neutrality, but believes absolute net neutrality is a utopian idea. This view is likely to find its way into the draft policy being worked upon by the government. Malvika Jain says mobile data plans linked to particular OTT services like WhatsApp and Facebook may not be allowed by the government. Take a look.
Even as high-pitched demands are being made to protect the internet and promote net neutrality, experts in the Telecom Ministry point out that the real issue is getting lost in the noise. Sources at Sanchar Bhavan say that internet users in India must focus on ensuring that they get equitable access to content over the internet rather than crying for net neutrality. Since availability of bandwidth is limited, absolute net neutrality may never be achieved. According to the Telecom Regulatory Authority's discussion paper, the most popular strategies employed by telcos to manage OTTs are fair usage policies and bandwidth caps. Fair usage policy means reviewing the data usage of each subscriber and limiting the planned speed of specific customers who are using excessive network bandwidth. DoT sources say that this practice is a business decision and is followed world over. The government's policy is likely to focus on ensuring that telcos don't discriminate between users accessing same content or charge different tariffs for accessing different services. This may mean that mobile data plans linked to particular OTT services like WhatsApp and Facebook may not be allowed by the government.
1. It must be equitable, must be effective. It cannot become the prerogative of the few. The second is, no one can claim of early arrival advantage. It must be open. It must be interoperable. That is not to be compromised. When we talk of open internet, in India we are very clear, we fully support the freedom of speech and expression.
According to government sources, the US regulations on net neutrality are unlikely to impact the Indian regime since the telecom regulations for mobile operators are different in the two countries. India will announce its draft net neutrality policy by the 9th of May. In New Delhi, Malvika Jain.
As this debate rages on, prominent tech entrepreneurs are battling for net neutrality. Kavin Bharti Mittal, founder of Hike Messenger, says, and I quote him, "Why are we trying to regulate OTT players and force them to pay a fee to telcos when our very existence is driving revenue growth for them? I'd say let's flip the argument. Why don't we as OTT players start asking telcos to pay us a percentage of data revenues for driving their data revenue growth?" Sounds absurd, doesn't it? Because it is. Both ways. No blocking, no throttling, no preferential access. These are the three tenets of net neutrality. And Facebook's founder Mark Zuckerberg says, and I quote him, "I think net neutrality is important to make sure network operators don't discriminate and limit access to services people want to use, especially in countries where most people are online," unquote. And of course, Mark Zuckerberg then making a case that net neutrality can exist with what he is trying to launch, that internet.org, and in a town hall, where else but on his Facebook page.
Well, speaking of that, a day after Flipkart cleared its stance on net neutrality by stepping away from the controversial Airtel Zero plan, travel website ClearTrip has also backed the neutral net by exiting Facebook's internet.org program. Now, ClearTrip has posted in its blog, and I quote, "We believe that the internet is a great leveler and that freedom of the internet is critical for innovation. ClearTrip is and always will be a fully committed supporter of net neutrality." So that's the latest there. Internet.org is, of course, the platform launched by Facebook. As we're saying, this debate will continue to rage on, and on the show tonight we'll be joined by Vijay Shekhar Sharma. He takes on the former new business development head of Google, Gautam Gandhi, as they face off on net neutrality. That's coming up for you in just a bit. But for now, in a break from tradition, IT big boy TCS and not Infosys will kick off the fourth quarter earnings tomorrow. A pickup in the deal pipeline and currency woes courtesy a strong dollar are likely to be key factors in the earnings report card this time. Kritika Saxena tells you what you can expect from TCS this quarter.
A positive start to the year, but an end riddled with challenges. That's the story of most Indian IT companies in FY15. With currency volatility becoming a harsh reality over the last 3 months and companies sounding cautious, expectations from the fourth quarter results season are running low. According to street estimates, the big four, that is TCS, Infosys, HCL Tech and Wipro, will post a moderate 2 to 3.6% cross-currency revenue growth, with TCS and HCL Tech leading the pack. The currency hit will come in on the operational level, with analysts expecting a negative cross-currency impact of 200 to 330 basis points.
And big boy TCS reports numbers tomorrow. Dollar revenue growth is expected to remain flat for the company at just 0.2%, whereas rupee revenue is expected to fall by 0.1%. Profits are also expected to be flat, falling 0.6%, whereas margins due to the cross-currency hit may see a dip of 40 basis points, coming in close to around 27%. Remember, TCS has posted below expectation numbers in the last 2 quarters. The street is hoping that the company will spring a positive surprise despite its muted mid-quarter outlook.
Not just TCS, Infosys, Wipro and HCL Tech have also tried to temper expectations with mid-quarter earnings alerts. Infosys expects a 60 basis point hit on margins, while Wipro says the impact could be 40 basis points. HCL Tech has been the most cautious, saying it expects cross-currency headwinds to knock as much as 100 basis points off its EBIT margin. While currency is likely to be a dampener in Q4 performance, analysts remain optimistic on the outlook for FY16. With better visibility on US demand, higher offshoring in Europe and increasing traction in digital technologies, all 4 IT majors are expected to sound upbeat in their business commentary. In Mumbai, Kritika Saxena.
It's TCS that's going to kick off the earnings season this year when it comes to IT companies. You can catch all of that live right here on CNBC TV 18. On to legal action now. The Supreme Court came to Vodafone's rescue today, rejected the Income Tax Department's plea opposing the demerger of Vodafone's tower assets in 2012. Ashwin Kumar, who is there in Supreme Court, now joins us. Ashwin, you'll first give us a quick background to this case and what exactly did the court have to say?
Well, just to begin with some background, Vodafone along with other telcos had sought to consolidate their passive infrastructure assets, which in other words, in simpler words, would be their tower assets, and they had sought to do so to divest, to demerge their tower assets from the company via a 2-step process into Indus Towers. Now, it is this 2-step process which the government, which the tax department rather, had frowned upon, and in fact had raised various contentions even before the Gujarat High Court. But importantly, in these proceedings, we saw a move towards the Apex Court, and over here they raised the argument that this 2-stage process was nothing but a colorable device designed to evade taxes. Now, this is here where the Supreme Court actually intervened and clarified that there is a very clear difference between tax avoidance and tax evasion, and it went further and has dismissed the tax department's plea that had sought to challenge this demerger process. What the Supreme Court has held is that the tax department cannot block the demerger, but it can go ahead and challenge and can raise the tax demand in question with respect to the IT laws and cannot seek to block this demerger. As of now, what we understand is that the tax department is seeking dues of near about 4,000 crore rupees from this entire transaction, which they have termed as a colorable device. But for now, a definite relief coming in with the tax department's plea seeking to block this demerger being shown the door by the Apex Court. Back to you.
For Vodafone, but let's talk about that other case you were tracking. Justice A.R. Dave, who headed the 5-judge panel in the National Judicial Appointment Commission case, has recused himself. Why has he opted out?
Well, indeed, there was a situation of conflict of interest, fireworks essentially, as had been pointed out by Fali Nariman. Now, today's hearing was crucial given that this was the first hearing after the notification of the Act as well as the constitutional amendment. And it is here that in a thinly veiled attempt to point out the conflict of interest, Fali Nariman, a senior counsel, a respected legal voice, raised the issue that can a judge who's a part of a constitutional commission such as the NJAC also be a part of the bench that is hearing the appeal against the very same Act? The NGAC Act. And it is in response to this that we saw a lot of fireworks. Justice Kurian, who's also a part of the bench, raised the issue that Justice Dave could not choose to be a part of a constitutional body, but could choose to recuse himself. This argument of Fali Nariman also came in for criticism by the government. The government had termed these charges as unfortunate and regrettable, but nonetheless, on account of all these fireworks that we saw across the bar, we now understand that Justice Dave has decided to recuse himself from this hearing, and we'll see further action only after this bench is reconstituted, finding a replacement for Justice Dave. For now, essentially Justice Dave recusing himself and the proceedings being put on a hold internally. Back to you.
Okay, Ashmit, appreciate you joining us with those details, but there's been plenty more action in court today. So here's a look at the other headlines. The Supreme Court has asked for the CBI to explain its stand in the case of Air India purchasing 111 aircraft in 2007. A PIL alleges that Air India's purchases strained its balance sheets and private airlines profited at the national carrier's expense.
The latest in the 2G case, the CBI today told the special court that former Telecom Minister A. Raja misled the then Prime Minister Manmohan Singh on spectrum allocation. According to the CBI, Raja deliberately advanced the allocation cut-off date to favour the accused firms.
The continued fall in global crude prices and the appreciation in the rupee has prompted oil marketing companies to cut petrol and diesel prices for the second time in the month of April. Petrol prices in Delhi will be cheaper by 80 paise a litre, while diesel prices will also fall by ₹30 in the national capital. The new prices come into effect from midnight tonight.
CNBC TV 18 exclusively learns the Finance Ministry has informed the Oil Ministry it will fully compensate the OMCs for the fourth quarter under-recoveries of the last fiscal. With this decision, North Block has agreed to pay 5,300 crore rupees as against the under-recoveries incurred. The pitch battle for Mangalore Chemicals may soon come to an end. Deepak Fertilizer sold over 12% stake in MCF 2 days ago, and today it sold another 5.2% via a block deal. The company is all set to offload its entire stake before the start of Zuari's open offer, which will begin on the 21st of April and close on the 6th of May. Well, aircraft maker Airbus has assured Prime Minister Narendra Modi that it will significantly hike outsourcing from India from the current $400 million to over $2 billion over the next 5 years. This will be music to the ears of Bengaluru-based Dynamatic Technologies, a Tier 1 supplier to players including Boeing, Airbus and Bell helicopters. In the second part of our series, Make in India, a new deal for defence, we put the spotlight on Dynamatic Technologies.
Every time the US Army flies its most used copter into enemy territory, it validates the work done here in the Bengaluru facility of Dynamatic Technologies. This homegrown player has been in the defense production space for well over 2 decades and boasts of big names as clients, including Airbus, Boeing and Bell Helicopter. Dynamatics is in fact the largest supplier in India to Boeing for the CH-47 Chinook copter.
Behind me is the Boeing Chinook assembly hangar. This is where the ramp and pylon assemblies are manufactured for the US Army. The company has handed over the first assembly delivery and will be making at least 99 more sets over the next 5 years. This is in fact Boeing's largest order in the country.
Airbus and Boeing were looking for suppliers in India. Airbus for the commercial jets, Boeing for military aircraft. We started with them and we've become Tier 1 manufacturers to both of them and single source worldwide. So we are proud of this journey. Going forward with Bell Helicopter, we are making a significant part of the world's largest selling helicopter, the Bell 407.
In February 2015, Dynamatic bagged a deal with Airbus for the supply of flap-track beams, which will be connected to the wings of the A330 planes for control of speed and altitude. Dynamatic has also signed a deal with the US AeroVironment to develop an unmanned aerial vehicle under a key tech transfer initiative between India and the United States. The 1,600 crore rupee company now has an order book of about 5,000 crore rupee with operating margins at a healthy 30%.
If you take our total sales size, roughly 2/3 of our business, because the global business is already global and the Indian business is partially global. So a majority of our sales are now global sales.
While the road ahead looks promising, the company still believes that tax rules around related party transactions need to be relaxed to draw more foreign direct investment into the defense sector in India. The long gestation periods for payment and defense buying is another cause of concern. With Purnima Murli in Bangalore, Malvika Jain in New Delhi.
And through the week, we'll be putting the spotlight on other defense manufacturers as well. Now, the Reserve Bank of India has given a facelift to its website, relaunched its official Twitter handle. Not just that, the Reserve Bank has even introduced a YouTube channel that will feature interviews of its top officials, press conferences, films targeted at consumer literacy. CNBC TV 18's Ritu Singh logs in.
Our state-old central bank is getting tech-savvy, and how? In a major image makeover, the Reserve Bank of India is now using the social media to reach out to the masses. Raghuram Rajan, who once famously said that the governorship of the central bank was not meant to win Facebook likes, seems to be more open to the idea of tapping the social medium now, with the RBI establishing its presence on both Twitter and YouTube. And in just 2 days of relaunching their Twitter handle at RBI_official, their following has gone up from 0 to almost 2,000 already. And not just that, the central bank has also spiced up its older and rather drab website with a clear department-wise bifurcation of information, and the new website is more user-friendly and has a cleaner, decluttered look. RBI plans to use Twitter to send alerts on new announcements in real time. Its soon-to-be-launched YouTube channel will also contain the press conference coverage and interviews of the top management and even films that are targeted at consumer literacy. The RBI's foray into the social media world has come at a time when online frauds are also on the rise. A most relevant example will be the message that was being circulated over WhatsApp called All Bank Balance Inquiry Number, an application wrongly attributed to the Reserve Bank which claimed to let customers check their account balances instantly. The RBI was quick to caution the public on its website about this fraud. Although the RBI has launched its Twitter handle and YouTube channel, it remains absent from the most popular social media platform, Facebook. And no, I'm not talking about Raghuram Rajan's fan pages, which of course you find in plenty. In Mumbai, Ritu Singh.
Well, the RBI getting tech-savvy, and it's not the only one. The Competition Commission of India is now on Twitter as well. With that, it's time for us to wrap up this edition of India Business Hour. We'll see you again tomorrow with the TCS numbers, the market action, and much more. Goodbye.